Hey, and welcome to Finance Insider. If you're looking to learn how to make money work for you, you're in the right place. Today, we're gonna cover basics of investment. And by the end of this video, you'll know how to grow your wealth. First, we're gonna talk about what investing is, different type of investments, and how to start with as little as $100. Investing is basically the act of putting your money in assets like stocks, bonds, crypto, with the hope of making money over time. Why to invest? Basically, investing allows your money to grow much faster rather than if you put your money into savings account. Thanks to compound interest, that works over time. Different type of investment. First is going to be stock. For example, if you buy stock, it's basically you're buying small part of the company, and if company does well, stock value goes up, and you can sell the stock for a profit. Second one is the bonds. Bonds is very similar when you, for example, taking money from the bank and you're paying interest over time to the bank. It's similar case, but in the opposite direction, where you lend your money to the government or to the company, which basically in thanks pays you interest in return. So now let's talk about ETF or mutual fund. So on the other hand, ETF or mutual funds, it's similar to buying the stock, but instead of buying one stock, you're buying a collection of different stocks. For example, S&P 500. Or the same idea could be with the bonds. Different mutual funds or ETFs that allows you to buy a collection of different bonds or stocks. So you don't have to buy one individual stock, where instead you buy a basket of different stocks or bonds. Last but not least is crypto. Cryptocurrency is more newer, more volatile investment, but it's more high risk, high reward type of thing. Now let's make a goal. Why you're investing? There could be different reasons why you're investing. First one is could be buying a home, retirement, or you just simply want to grow your wealth. So how you get started with that? You need to get broker first. So what we need is start small. So first you have to choose what brokerage to invest. Depending on your region or where you live, you have to find best brokers that fits your needs. For example, let's say if you're in North America, two different brokers could be like Wealthsimple or Robinhood. They're very popular and very easy to invest with. And you can start very small. You don't have to have a lot of money. You can start with just $100. Invest every time, buy stocks, bonds, or even crypto. Just remember, Rome wasn't built in a day. So that's the idea with investing. You have to invest over time and just keep investing and reinvesting your profits. Thanks to compound interest, it will go faster. Now, let's talk about risk and reward. Of course, there's no type of investment that doesn't have a risk. So basically, it depends on your risk tolerance. So if you're young, you have more time to invest and you don't worry about high volatility, could be crypto or stocks your best bet. But of course, I would say it's similar to driving a fast car versus a slow car. Let's say you try to get from point one to another very fast. You can get there quicker, but there's a high risk of getting into crash. That's why you can't always just drive straight from point A to point B as fast as possible. Of course, it's safer to take a measured approach. It's driving like 100 per hour or 200 per hour. Faster you go, the higher risk of getting something wrong. But if you drive with a moderate speed and within safe limits, everything goes smooth. Same goes with investment. Crypto, I would say, is the highest risk, highest reward, where you have very high risk, even with the safest cryptos, but also high reward. With the stocks, I would say, depending, of course, which stock you invest, it's a moderate risk. But of course, depending on which kind of stocks you invest in. But if you're talking about the bonds I would say is the safest one, but of course also depends which kind of bond you invest. You could invest in US bonds, which are considered very safe because bonds generally don't go bad unless the country itself is in trouble. For example, there's very low risk that US bonds will go bad anytime soon. So I would say that's the safest in that case. But if you invest in the bonds from third world country, where the government is less stable, you might see higher rewards in terms of return, but also much more risk that bond won't be paid back at all or will be paid very late. Now let's talk about the common mistakes that first-time investors are doing. First one is a panic sell. So let's say, for example, you see the news that investment, stock market, crypto, everything is going down and you're panicking. Your worry is that your investment going down and you go to investment app and you just sell. That's called panic sell. Of course, depending what type of investment you're investing to, but if you hold your investment long term, it's most likely going to return better if you try to time the market. So that comes to the second point, trying to time the market. Unfortunately, it seems very easy to try to time the market, but in reality, it's not. Even the best brains out there on Wall Street try to do that, but they're lucky maybe like 50-50 chance. It's gonna go up or it's gonna go down. But most of the time for retail investors like you and me, it's almost impossible to do very good long term. Maybe short term, but who knows, right? So let's do a recap. We covered what investing is, different type of investment, and different ways of avoiding first-time risk you're investing, such as panic sell or trying to time the market. As we mentioned before, it's best when you start small and you invest over time. In future videos, we're going to talk about different type of investments, different type of risk rewards, and then go in depth of each topic separately. So like, subscribe, and leave comments below. I'll try my best to reply to any of the questions guys you have, and I'll give you as deep as answers as possible I can. So don't hesitate to ask. And in that case, I'll answer. Thank you so much. Bye.